Welcome back to our channel where we explore current events and their potential impact. Today, we will be discussing an article about the recent troubles of two small banks on the West Coast and how they have caused concern for larger financial institutions. As always, make sure to subscribe and hit the notification bell to stay updated on our latest videos. Silicon Valley Bank, SVB, and Silvergate Capital are two California-based lending institutions that have been struggling due to rising interest rates. These banks invested heavily in assets like Treasury bills when interest rates were historically low. However, the Federal Reserve's aggressive campaign to bring down inflation has resulted in the rapid increase of interest rates, causing the value of their existing bonds to lower. The withdrawals from SVB were primarily from startups and tech firms, which further exacerbated the bank's losses. Customer withdrawals forced both SVB and Silvergate to sell their assets at a loss, leading to investor concerns that this could happen to much larger banks. These two small banks have been struggling due to rising interest rates, which has caused concern among larger financial institutions. During the pandemic, banks took in tons of new deposits and invested in assets like Treasury bills because interest rates were historically low. However, the Federal Reserve's aggressive campaign to bring down inflation has resulted in a rapid increase of interest rates. This has caused the value of their existing bonds to decrease, leading to significant losses for banks like SVB and Silvergate. In addition to rising interest rates, SVB has also suffered from withdrawals from startups and tech firms. These withdrawals further impacted the bank's losses, causing them to sell their assets at a significant loss. This has led to investor concerns that this could happen to much larger banks, causing their stocks to fall. While it's true that larger banks are much stronger now than they were before the 2008 banking crisis, concerns remain about their potential vulnerabilities to rising interest rates. Federal Deposit Insurance Corporation Chair Martin Gruenberg has noted that unrealized losses on available-for-sale and held-to-maturity securities have totaled $620 billion at the end of 2022 across all U.S. banks. These unrealized losses weaken a bank's future ability to meet unexpected liquidity needs. In closing, while the struggles of Silicon Valley Bank and Silvergate Capital are concerning, the larger banks are still generally in strong financial condition. However, investor concerns about the potential impact of rising interest rates remain, and it's important to monitor this situation moving forward.